Vaibhav. In today's session of Market Movers, we will be considering the gold, which has been struggling closer to USD 2000 level, and last couple of sessions we have seen it moving in a range bound manner between 1900 on the lower side and 2000 on the upper side. So we will see if there are any emerging trading opportunities in today's trading session given its range bound momentum. If you consider the trading context for the day, we had a lot of PMI data coming in for major economies of the world, starting from the Asian trading session and also later in the European trading session. We also got the PMI releases for major European economies. And North American trading session, we are scheduled to get the PMI readings for the United States as well. Now, moving back to the China, this expansion which we are seeing in the Chinese economy is likely to continue for foreseeable future. The sharp rebound on back of earlier contraction is still fueling these higher reading, and now for the month of August, the Caixin Services PMI stands at 54, which is just slightly lower than the prior month reading of 54.1, but still it points to the strong expansion. And I think for even other major economies, the PMI readings, we have got the final PMI readings which we have got today are pointing to the continued expansion, and though the pace of expansion might slow down to some extent, but the trajectory is upward, and that bodes well for the economic well-being of the people of the respective countries. Now, moving on to the North American trading session, we got these initial jobless claims for the United States, and the reading of 881,000 is the lowest since the lockdown began on account of the coronavirus outbreak. And now the economy is stabilizing to some extent, and this reading for the week ended 29th of August is better than the expectation, with claims being lower. Just in a while, we will also be getting the ISM non-manufacturing PMI for the month of August, and here the expectations are quite optimistic, and we are likely to continue to see these strong expansion being observed in the US economy, and that is likely to result in a non-manufacturing PMI reading closer to 57. Now, moving on to the technical outlook, we will cover the gold, and then we will move on to the USD JPY. Let's start with the SAU in terms of USD's technical outlook. This is the daily time frame chart, and the gold has entered into a consolidation phase, and it has been range bound for last couple of weeks between 1900 and 2000. And this time around also, at the start of week, we saw it making a high closer to USD 2000 per ounce level, and from there on it has been a journey downhill as the USD has gathered strength, and that is reflected in the gold weakening against the USD. I think if this trajectory holds, we might see the gold moving lower towards 38.2% Fibonacci retracement, and that levels points to 1836. So here also we have the possibility of gold moving lower by 4 to 5 percentage point in coming session. But for us, if we were to focus on today's trading opportunities, we are mainly concerned with the short to medium term trajectory, and we will be not going for the target that big, but still we are going to trade with the trend, and in that manner we will see if there are any short term trading opportunities for us, given the fact that gold has now been in a consolidation phase and it is not no longer moving rapidly on the higher side. We have this central pivot point around 1970, and as long as gold is able to hold below it, I think we can continue to look for short selling opportunities. And in today's session, both these pivot point series as well as the regression curve are pointing to the weakness being persistent in the gold. And if we were to try to exploit that to our advantage, then I think we will have to use the central pivot point as a crucial marker. and as long as the price action is below that, I would say that it will be prudent to look for short selling opportunities with the time frame being short to medium term, and we can expect further retest of this 1900 level in a session or two. Coming to the hourly chart, here also we have these confluence of 50 and 100 SMA pretty close to 1970, and I feel we can utilize these prior consolidation price zone of around 1970 to 1960 as a buffer zone. And if, say, in today's trading session, if we see some recovery in the gold's prices, and if it is able to rise toward this 50 SMA zone, and after due consolidation we can indeed look for fresh entry, and the stop loss should be good enough if we keep it at 1980. So for a entry anywhere close to 1950 to 1960, a stop loss of 1980 should hold well. That is the stop loss of around 1.5 percentage point, and in return of this risk we can target almost 2.5 percentage to 3 percentage point on the lower side, as our target is going to be below the prior swing low around 1900. So that opens up the possibility of making the risk reward ratio 1 is to 2, which is conservatively speaking pretty good. Now let's see the strength which we are observing in the USD JPY is likely to last or not. In yesterday's session, we had seen this opportunity emerging where I had talked about the USD JPY's possible rise, and that is holding well in today's trading session. If you consider its turnaround closer to 104, I think now after making this double bottom kind of formation, it is likely to continue in this upward trajectory. And of course, on the higher side, we have these crucial resistance coming in to play around 107, which is also its 61.8% Fibonacci expansion of its prior rally. So here, watch out for the price action towards 107, and that can also be considered as our immediate target zone. If you consider this combination of 10 and 20 EMA, this is also pointing to the change in trajectory for the USD JPY, and with that in mind, we can indeed utilize this central pivot point, which is around 106, as our decisive marker. And as long as the price action is above that, I would feel pretty confident to go for long trades, to go for buy trades with possible targets coming in the vicinity of this first resistance of this month's pivot point series. Yesterday also we had uh, taken a look on the similar opportunities, and not much has changed while coming to the today's trading session, apart from the fact that we have already seen this move on the higher side. So if you had missed out on any entry point in yesterday's session, today it will be a bit tougher to get the risk reward ratio the optimum, as we have to see if we can get any correction in the USD JPY, maybe toward this 106.20, or if we are fortunate enough towards 106 levels. And if that indeed happens, if we do get this correction and after due consolidation, I would say that we should lap up the opportunity while keeping the stop loss anywhere close to this immediate swing low. The regression curve has now flattened as the price action has been very range bound. Of course, the range has been quite large compared to its historical perspective, but still, given the volatility which we are continuing to see in various financial instruments, that shouldn't be surprising. Now, if we were to use the lower time frame chart to optimize our entry and exit, we have this confluence zone of 50 and 100 SMA around 106.10 zone. So here in between these price band, we also have the lower band of this upward moving price channel. So taken together, we have these strong support zone forming around 106 to 106.10 price band, and I feel if we are going to go for any fresh trading opportunity, then the entry point won't be better than this, but that is almost 30 pips away from the current level, so we will need to adopt the patient approach here, and we will have to sit on the sidelines and try to get the entry point as close to the 50 SMA as possible. And if we get the entry point after due consolidation, after finding support closer to this crucial support zone, I think that would be an ideal development. But let's see how things unfold in today's trading session, and then we can utilize this immediate swing low around 105.6 to 105.7, this price band as our deciding level whether to hold or whether to fold. So if we are going for a long trade anywhere close to 106, then I think the stop loss should be closer to 105.60 to 70. Of course, there is a price range and you will have to choose as per your convenience depending on where is your entry point. And then with the risk of around 40 pips to 50 pips, we will have to target almost 100 pips on the higher side, and that way we will have the risk reward ratio of 1 is to 2. And as we have discussed, we have pretty strong possibility of USD JPY moving past this immediate swing high. So 107 price zone is not really far away from the current valuations. So that's it from my side for today's trading session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.